Ever thought about how to effortlessly grow your wealth? Picture this scenario. What if I told you there's a way to invest that not only beats 90% of actively managed funds, but also requires minimal effort on your part? In fact, studies show that over the past 15 years, nearly 80% of mutual funds have underperformed the S&P 500. Welcome to Satoshi Finance, where we break down complex finance topics to educate and empower you on your journey to financial freedom. In today's video, we'll uncover the secrets of index funds, an investment strategy endorsed by Warren Buffett himself. But first, I will explain the differences between index funds and mutual funds, and then I'll share my top 5 index funds. Stick around to learn why this could be the best way to invest your money in 2024 and beyond. Index funds and mutual funds are both pooled investment vehicles, but differ significantly in management style and cost. Index funds are passively managed, designed to replicate the performance of a specific market index, such as the S&P 500. This passive management results in lower fees since there's no need for active stock picking or frequent trading. Investors in index funds benefit from broad market exposure, low costs, and a strategy that tends to outperform many actively managed funds over the long term. In contrast, mutual funds are actively managed, with a professional fund manager or a team making decisions about which securities to buy and sell in an attempt to outperform the market. This active management incurs higher fees due to the research, analysis, and frequent trading involved. Mutual funds offer the potential for higher returns, but come with increased costs and the risk of underperformance compared to their benchmark indices. Additionally, mutual funds may offer more specific investment strategies targeting particular sectors, regions, or types of assets, providing investors with more tailored investment options. You might hear people using the terms index funds and ETFs, exchange-traded funds, interchangeably. Most index funds have an ETF equivalent with the same holdings, but slight differences in trading. Index funds trade once at the start and end of the day, while ETFs can be traded anytime the market is open. Index funds often have higher minimum investments, but ETFs offer more flexibility. The FNILX, or Fidelity Zero-Fee Index Fund, is an investment option that mirrors the performance of the SP 500 without charging any management fees. This makes it an attractive choice for cost-conscious investors. Over the past 3 years, FNILX has achieved an average annual return of 9.15%, and over 5 years, it has averaged 15.81%. However, a key limitation is its availability exclusively through Fidelity, which reduces flexibility for investors who prefer using other brokerage platforms. Despite this limitation, FNILX remains a compelling option due to its zero-fee structure and strong historical performance. Investors using Fidelity can benefit from broad market exposure to the top 500 companies in the US without incurring the usual costs associated with index funds. This fee advantage can significantly impact long-term returns, making FNILX a smart choice for those looking to maximize their investment growth over time. If you've made it this far, consider taking a moment to subscribe to our channel. Subscribing is absolutely free, and you can always change your mind. We have a wealth of financial insights and exciting discussions lined up for you. Your support not only helps us reach a broader audience, but also motivates us to continue creating high-quality content that educates and empowers viewers like you. So, hit that subscribe button, stay tuned, and join us on this journey towards financial empowerment. Thank you for being a part of our community. The Vanguard Total Stock Market Index Fund, VTSAX, offers investors ultimate diversification by providing exposure to 374 stocks across various sectors of the US market. It operates with an exceptionally low expense ratio of 0.04%, making it a cost-effective choice for long-term investors. The fund's performance has been strong, with a long-term average return of 8.2%. VTSAX is available under multiple ticker symbols, including FZROX for Fidelity users and VTI for those preferring an ETF format. This broad availability makes it accessible to a wide range of investors, offering a simple and efficient way to gain comprehensive market exposure. Its diversified nature and low costs make it a popular choice for those looking to invest in the total US stock market. The Vanguard Value Index Fund, VVIAX, focuses on investing in large, stable US companies, making it an appealing choice for investors seeking reliability and steady growth. Since its inception in 2000, VVIAX has delivered an average annual return of 7.42%, with an impressive 11.99% return over the past 5 years. This performance highlights its capability to provide solid returns while maintaining a relatively low level of risk. With an expense ratio of 0.05%, VVIAX is a cost-efficient option for investors. However, it requires a minimum investment of $3,000, which might be a barrier for some. For those looking for a more flexible option, the ETF equivalent, VTV, offers similar benefits with potentially lower initial investment requirements. Overall, VVIAX presents a valuable opportunity for investors prioritizing stability and long-term growth. The Vanguard Life Strategy Growth Fund, VSMGX, offers a balanced approach to investing, with an allocation of 80% in stocks and 20% in bonds, providing both growth potential and income stability. Additionally, it includes international exposure, giving investors a diversified global portfolio. This balanced fund is designed to provide a moderate level of risk and reward, making it suitable for investors with a long-term growth perspective. With an expense ratio of 0.14%, VSMGX is a cost-effective option compared to many actively managed funds. Since its inception, the fund has delivered an average return of 8%, demonstrating consistent performance. The blend of U.S. and international equities along with bonds ensures a diversified investment that can help mitigate risk while aiming for substantial returns over time. This makes VSMGX an attractive option for those looking to invest in a well-rounded portfolio with a growth-oriented strategy. The Vanguard S&P 500 Index Fund, VFIAX, is renowned for its simplicity and effectiveness in mirroring the performance of the S&P 500, which represents the 500 largest publicly traded companies in the U.S. market. This fund is often referred to as the gold standard of index funds due to its reliability and long-term track record. With an expense ratio of just 0.04%, VFIAX is incredibly cost-effective, ensuring that investors retain more of their returns compared to higher-cost alternatives. Since its inception, VFIAX has delivered an average annual return of approximately 7.97%. Over the last 5 years, it has performed even more impressively, with an average return of 15.76% annually. These returns highlight its ability to capture the overall market growth over extended periods, making it a favored choice for both passive investors and those looking to build a solid foundation for their investment portfolio. For those preferring an ETF format, VFIAX's equivalent, VOO, provides the same exposure to the S&P 500 with the added flexibility of intraday trading. Both options offer investors straightforward access to a diversified basket of leading U.S. companies, making them ideal for those seeking to align their investments with the broader market trends efficiently and cost-effectively. In conclusion, index funds represent a powerful tool for investors seeking to build wealth with minimal effort and cost. By mirroring the performance of broad market indices like the S&P 500, these funds consistently outperform the majority of actively managed alternatives over the long term. Whether you're new to investing or a seasoned investor, the simplicity, low fees, and proven track record of index funds make them a compelling choice to consider in 2024 and beyond. Stay tuned as we continue to explore more strategies and insights to help you achieve your financial goals. Remember, at Satoshi Finance, we're here to educate and empower you on your journey to financial freedom. If you found this video helpful, don't forget to give it a thumbs up. Subscribe to our channel for more insightful content and hit that notification bell so you never miss an update. Thanks again for watching, and I'll catch you in the next video.